A laptop at the kitchen table does not automatically make the whole kitchen a tax deduction. This is founder filing, where we make the paperwork of starting a business simple and clear. Today we are explaining the home office deduction in general terms. What it is, the exclusive and regular use test, simplified versus actual expenses, square footage, mistakes that may draw attention, and record-keeping tools like QuickBooks, Bench, Wave, and Found. This is educational information only, not tax or legal advice. Eligibility depends on your facts, work status, business use, and current tax rules. No deduction is guaranteed, and you should talk with a CPA or tax professional before claiming it. The home office deduction is generally for eligible business use of part of your home. It is commonly relevant for self-employed people, freelancers, and business owners, not regular employees working from home for an employer under current federal rules. The deduction may relate to a portion of home expenses, but only when the space qualifies. The point is not that every home expense becomes business. The point is that a specific business use area may be deductible under IRS rules. The Do It Today tip is to identify the exact space you believe is your office before thinking about dollars. The caveat is that this area is fact-specific, and state rules may differ. If you are unsure, ask a CPA before filing. The phrase to remember is exclusive and regular use. Exclusive generally means the area is used only for business, not sometimes for homework, guests, gaming, or family bills. Regular means you use it consistently for business, not once in a while. A separate room can be easier to explain than a shared corner, but a clearly defined area may qualify if it is used only for business. Some exceptions exist for inventory storage or daycare situations, which is another reason to read the current IRS rules or talk with a tax professional. The Do It Today tip is to take photos of the workspace and keep them with your tax records. The drawback of stretching the definition is that weak facts are harder to defend if questioned. The simplified method is designed to make the calculation easier. The IRS simplified option generally uses a standard rate per square foot, subject to a maximum square footage limit, instead of tracking a percentage of many actual home expenses. It can be helpful if you want less paperwork and do not want to deal with home depreciation under the actual method. The drawback is that it may produce a smaller deduction than actual expenses for some taxpayers. It also has specific rules about elections and how it is claimed. The Do It Today tip is to ask your CPA to compare simplified and actual before filing. Skip simplified only because it sounds easy if your actual records are strong and your professional says actual is better. The actual expense method can include a business percentage of certain home costs, such as rent, mortgage interest, utilities, insurance, repairs, and depreciation, depending on the situation and current rules. It requires better records and more careful calculation, often using square footage to determine the business use percentage. This method can be more valuable for some people, but it also brings more complexity. The drawback is that depreciation and later home sale questions can matter, so do not treat it casually. The Do It Today tip is to keep home expense documents in one folder by year before tax season. Skip actual expenses if you do not have records or do not understand the long-term implications. A CPA can help compare methods. Square footage should be based on the area actually used for qualified business purposes. If you use a spare bedroom only as an office, measure that room. If you use a portion of a room, measure the clearly dedicated area, not the entire living room. Hallways, kitchens, couches, and shared family spaces usually create problems unless a specific rule applies. The practical tip is to draw a simple floor plan with measurements and keep it in your records. If your workspace changes during the year, document the dates and changes. The drawback of guessing is that round numbers without support look weaker. Skip claiming space you cannot describe clearly. A home office deduction is easier to defend when the physical space makes sense. Common mistakes include claiming a space that is not used exclusively for business, claiming too much square footage, deducting personal furniture or renovations as if everything is business, ignoring employee versus self-employed rules, mixing business and personal receipts, and failing to keep records. Another mistake is assuming that a deduction automatically triggers an audit. The better framing is that aggressive or unsupported claims may draw attention if the facts do not match. The Do It Today tip is to write a short note explaining how the room is used, how often, and why it is the principal place for your business or administrative work. The caveat is that audit risk depends on the full return, not one line. QuickBooks is a strong mainstream bookkeeping option if you want bank feeds, categories, reports, invoices, and accountant access. Its drawback is cost and learning curve, so skip it if your business is extremely simple. Bench is a done-for-you bookkeeping service for owners who want humans handling the books, but it costs more than software, so skip it if budget is tight and you can keep records yourself. Wave is a simpler accounting and invoicing option that can work for small businesses watching cost, though it may not fit more complex books. Found is useful for self-employed people who want banking, receipts, expense tracking, and tax set-aside habits together. Links below support the channel if one fits your record-keeping style. The home office deduction is not about claiming the whole house because you answered emails at home. It is about a specific space used regularly and exclusively for qualified business use, with records that support the claim. The simplified method is easier, the actual method may be larger but more complex, and the right answer depends on your facts. QuickBooks is best for mainstream books, Bench for done-for-you help, Wave for simple cost-conscious records, and Found for self-employed banking plus tax organization. This is educational information only, not tax or legal advice. Subscribe to Founder Filing for clear tax paperwork explainers. The paperwork is simpler than it looks, so take it one step at a time, and when in doubt, talk to a CPA or attorney.